Hey everyone, welcome to Stock Talk on October 31st. Today really marks an important day because it was the close of the month or the close of the monthly candle, and of course it's the close of the daily candle. So here's SPY, right? The S&P 500 on the yearly chart, which we look at for broad markets and the general market direction. So in past videos, I talked about a red area, and let me show you guys. Here's the red area spanning from 248 to 251. That's my SPY target. And do I think we can still get there? Of course we can. And I remember in the past few days, I was a little more bearish, on the more bearish side. And today, obviously, we gapped higher, but look how we closed the day today. Okay? That's interesting. That's number one. This all happened in the last hour. Number two, let me show you guys the 20-year monthly chart of the S&P 500. Now, showing you this chart, showing you the candle, this is completely formed. This candle is done. It cannot be moved. What can you say about the markets? Well, you can say, well, we're looking at this chart, and in monthly time frames, there is trouble brewing ahead. Okay, so it doesn't have to be November, December are generally fourth quarter positive months. We know that. And sure, the markets can push higher during that time as we are still, on this chart at least, we're a little bit oversold. But the thing is, the candle that was formed this month is not, look at the magnitude of that candle. Look at the magnitude of the run up. There's certainly more correcting that we can do in the weeks to months ahead. Now, can we continue our short-term rally? Yes, we can. We can continue short-term rally, but I also want to place a question mark, right? A question mark because we have a tail candle that's made near the 20-period moving average, okay? This generally signals a move back to the downside. We've gotten rejected near the 20-period moving average in the past, and we're getting to that area again today. And this, like I said, happened all in the last hour, right? We were looking solid. 273, even though, on the 20-year monthly chart, we closed at 273, still going to look terrible. But moving so far down from 273 to 270 is almost a $3 move. And you can see the candle that was made pretty much today, right? So also, Apple's earnings. That is a wild card factor. And, you asked me what's going to happen with Apple's earnings. That's going to be anyone's guess. Trust me, no one knows for certain what will happen on earnings day for Apple, okay? That's just the matter. I'm not going to predict the future, because chances are if I try to predict that earnings, whether it's going to work or not, it's not gonna work. At some point it might work, and then at some point it might fail. I'll talk to you guys about that in a moment. But here's Apple. Can you see that? I've been pointing how Apple is in a more bull flag trajectory, right? This is the stock that's really been holding us, cushioning us from the blow, right? When the stock market went down, right, and you guys can see the past few days, this Apple stock just went through this channel. Can you guys see this channel? It didn't drop significantly. So what are we seeing on this chart? Well, actually, if I remove these two lines, you can see that we've been rejected near the 20-period moving average quite often in the past week. That is actually a more bearish trajectory. So that's why I want to place caution for people in the markets right now, right? I talked to the members how, today we were looking bullish. So I was entering long early in the day. But looking at this chart, looking at Apple with earnings coming out tomorrow, caution is about. So there's a couple of things that we're monitoring, right? Apple has the potential to move higher. It has the potential to move lower as well. And if that is the catalyst for the markets to push lower, be very, very careful as we move on forward. Remember, midterms still is on November 6th. That's still around a week away, right? And you can imagine, like I've told people in the past, right? SPY, S&P 500. Are we going to go zip line back up? No, we're not, right? I think we're going to fluctuate in this area for a while before we slowly recover, perhaps near the end of mid to end November to December. Okay, that's the thing. Now, here's the 248 to 251 area, right? The red box, or my SPY target. Do I think we can reach there? We can, and it is possible that we can still reach there. And it doesn't have to be the next few days, but we have to keep that in the back of the mind if we do reach down here again. This gray area is a technical support from past instances, past months. So, here's the gray area of support. We've tested already 258 to 261. We went to, I believe, a low of around 259 and change. We tested it once. What do you think might happen if we test it again? Right? The chance of that collapsing will be greater in that case. And, that would be the area in terms of my target. So what is the current environment right now? Sure, we went higher, but there's several indicators all of a sudden. Early morning indicators were pointing towards a more bullish run. 4/NQ was one that we were watching on the 20-day hourly chart. And we saw there was this channel, lower highs until we broke out. Reconfirmation, broke out. Can you guys see that? And we wanted to take a position around this case, right? Around 6 to 7 a.m. Of course, this is early morning, so whether you could trade or not, but this was a bullish break. And we did, in fact, move higher, right? So, that would be possibly, we broke out to the upside, but just be careful because we could still drop. We could still drop to this area before possibly recovering in the next few days to next week. Okay, so there's still that potential for a drop. It is not gone, especially looking at this, this yearly chart. We have some problems, and keep that in mind. I think we might have a rally in the next few days to weeks, possibly towards December, but at the same time, we've established that monthly candle. You have to take that and be warned about it in the coming months. Okay, let's take a look at TVIX. So here's TVIX, and in past instances, we talked about how it was over the 200 period moving average, which is the red line, right? And then all of a sudden we came down and gapped a little bit lower, but we didn't really end the day, that bearish, right? And, would I go into TVIX right now? Probably no. The answer is no, as we're moving lower. But at the same time, if while I am long early in the day, I have my stop set just in case my stops get triggered and the markets do have that flush lower, right? That's always on the back of my mind given what happened in the last hour today. So here's volatility right now. So you can safely say that right now the 200 period moving average in this case is still acting as a resistance. So that area is from 54.73 to around $57. That area I would look for resistance. Is this out of the bullish trajectory? Well, if you did this support line that's gone all the way up, you would have said, well, that broke it, right? It broke the bullish line. So I think in this, goes to the fact that we might be in a short-term rally mode, but I don't think volatility is going to be going away. As a matter of fact, if we get volatility back to $24 to $30, I would be looking to possibly buy that as a possible long trade. Just keep that in mind. That's my point of view here as we move forward. All right, so that's TVIX. Let's take a look at crude oil. Crude oil, really nothing has changed in this graph, right? Remember we talked about how this was a bear flag pattern, and we're seeing bear flags left and right, right? So what's the bear flag? Here's the pull, flag, pull, flag, pull, flag, pull. So really self-explanatory here. Nothing new to report here, and market was pushing higher today, but crude oil pushed lower today. So can see weakness in crude as we move on forward. Now, of course, we are getting to this major support level, but regardless, as long as we continue to pull this bear flag trajectory, look for more downside in crude oil. So if you weren't already in it, the ticker to watch is DWT, which is inverse crude oil. As crude oil pushes lower, DWT would push higher. That's the one you would be looking at if you aren't in it already. We've been talking about this pattern for a while. It's just playing out just how it is. /NG, and a lot of members asked me last night about where natural gas was going. And I pointed this out. And you guys can see I removed a support line for clarity purposes. You guys can ask the members. I posted this last night because people were asking me, where's natural gas going? Because it looks like, it's almost like a question mark at the moment, yesterday at least. So I pointed to the members. I actually put this line last night. I said that if we can close above 3.23, natural gas is actually looking quite bullish. And the reason is, while this was a topping area, we should have come down. We should have continued lower. But what happened? Every time we closed below the 20 period or near the 20 period moving average, we didn't have a follow-through move below the 20 period moving average. Every time we did that, we got pushed higher. We got pushed higher the next day. So actually, natural gas is looking more bullish in the short term. Okay, just keeping in mind that we do have a resistance and there is a gap fill area up here from 3.330 to 3.40, around 3.41, around that area. But natural gas on the short term is actually looking more bullish. So, and this is why, if you guys are in the course, you guys have the, I guess the opportunity to really get some live updates, live thoughts about what I thought about the market. Yesterday, last night, I posted my thoughts on the market. I said the markets are looking good as we have several, confirmations that are developing at the time. And, today's, really the aftermarket movement was the necessary confirmation that we needed for a possible long entry. So there you go, right? Technical trading. So here's natural gas looking good and it's pushing higher. So keep that in mind as we move forward. But yeah, that's your natural gas chart. Let's take a look at a couple of your tickers. We'll start with KEM, submitted by a member on the Facebook group. So thank you for that. So here's KEM. Okay, so KEM, it looks like it's gapping higher. It looks good. This is taking advantage almost like, well, remember, this is also earnings, due to earnings. So it's almost taking advantage of the market momentum for it to move higher. So let's take a look at this. I think, near term, it looks good. It certainly can push higher. We are a little bit overextended, but this is a positive movement, right? Positive movement as we have no sign of a trend change back to the downside. So keep that in mind. We do have some resistance areas. For example, I think this area of $24.13 will be a pretty big resistance area. And of course, if we do get up here to 26.74, that is also a resistance area. So let's take a look at this on a more longer time period. Interesting. So, wow, apparently I did some sort of trend analysis in the past, and when we broke above, we really did break above. So, so here you guys can see that, this was my past support line a long time ago, and we broke below it, but then we have an active push to the upside given earnings. So, the market reaction's good. If we're pushing higher, that's great. I would let this continue to play out. Just be careful, because if it does drop, you want to make sure you have a stop, right? You don't want to be, the last person in and then the last person out. That's no good. So yeah, overall looks good. Thank you very much. Paul, woohoo, could you check out SENS, please? Yeah, so SENS, looking at this chart, interesting. So the catalyst here is around a week away, earnings, right? So upon earnings report, we really can have a mixed reaction. You can see that initially, on these earnings report, it doesn't do too much, right? It doesn't do too much, but you want to keep that in mind as we move forward. So how do you take a position in this one, right? So you have to leverage your risk versus loss, right? In this case, if you feel that you know the company's fundamentals, you think that earnings or revenue is going to be great, then you could take the entry position, but again, have a stop loss ready just in case you need to get out of the trade quickly. But this one, you know, moving like similar to this kind of trend, should push to the upside. But at the same time, I would perhaps wait, right, for until we can break above the 20 period moving average, which we haven't done yet. So let's wait for that break above, perhaps on a weekly basis, then possibly look into this one. So keep that in mind as we move forward. Yarvin, you're welcome. Rocky Always Learning. No problem. Watching the market, not investing, just watching. Only been reading about a year. Yeah, Rocky, there you go. And you know, you guys, this is a turbulent environment. It is not easy to trade, guys, because you can imagine, you know, we're looking at SPY, right? At SPY, and people, and you know, long traders, short traders, whatnot. Long traders have been, you know, attempting to guess the bottom. Was this the bottom? No, stopped out. Was this the bottom? No, stopped out. Was this the bottom? And you know, and so if you're guessing, chances are the best way is just like what you're doing. Watching in this case, not actively participating. And it depends on how patient you are, right? If you feel like we're so oversold and we're due for a bounce, and you know, you could certainly take position in there. But then if you take it while it's moving lower, you know, then you're more closer to a possible area of support, and you're more likely to get a bounce off that support, if you know what I mean. So good job. I like that strategy, Luis. Thank you, Kevin. Hoping the Bears win the battle until Wednesday. Just more of my position stake. I just wanted to take time to thank you for doing Stock Talks. Thank you, Luis. I appreciate that comment. I'm always here. So yeah. 7-day options. Been waiting all day for this. Thank you very much for that, Eric. Hey, Kevin, why do buyers come in at the lows, meaning prices will continue down? So buyers coming in at the lows doesn't mean the prices will go down. It's just that recently we've seen that people were trying to buy the dip, which hasn't been working. Okay. And you know, people have been guessing, like I said, this is the bottom, this is the bottom, this is the bottom. People have been trying to buy the dip, and for the most part, this time around, most of the people have been losing. In the past, it has worked. This time around, people have been losing money. So just keep that in mind as we move forward. Of course, let's take a look at DRIP really quick. So DRIP down here. So DRIP is looking, you know, fine in terms of an uptrend. This one is likely to push higher in the future. And that's just how it is. You guys can see that we came down, formed a tail candle. We didn't get to the 20 period moving average before we managed to even, you know, come back up during the day today. So this is likely to push higher as we move on forward. And, you know, we were a little bit overextended. So got to recover, got to come back to the 20 period moving average before perhaps moving higher. So this one is a good one to look at. I like it. Okay. Luis. Kevin, I'm so sad right now. Oh, wait, Luis. I'm so sad right now. I invested approximately $600 into options, and they were around 3,000. I'm going to go cry. So, yeah, you know, just manage your risk, but I hope everything did work out for you in the future. Zane, Coolio, Brolic, Synthartis, George, guys, everyone, thank you for all of your comments. If I didn't tackle your ticker, please resum your ticker in the comment section down below. Leave a like if you like this video. See you guys tomorrow, of course, and happy trading. Every day is going to be volatile up to and including after midterms. So keep that in mind as we move forward. All right. Thanks, guys. See ya.